Hey, Bulls and Bears. It is Wednesday, December 8th, 2021. Thank you so much for being here. Let's talk about the markets. We've got a lot of other economic, financial news to go over today and some very important things that I want you to keep aware of and to stay on top of. Now, first, let's talk about the markets. All major indexes today in the green, And I have to keep reminding people when we see these sell-offs that the dip will be bought. The dip will be bought by the money printers, the Fed, stock buybacks, which we're seeing record stock buybacks by companies. That way the insiders, the CEOs, they can sell their own personal shares while the company continues to buy back the stock in the background. And instead of reinvesting those profits into their employees, into their workforce and giving higher wages, they're doing more and more stock buybacks. You also have institutions, including maybe even your 401k institutions, buying these markets, buying these dips. But it's interesting, when we see the sell-offs, they put the blame out there on something that everybody forgets about a couple days later. So remember the emergence of the new health crisis variant. That was a big sell-off. Well, I guess the variant is no longer a threat because now markets are pushed back up again here towards all-time highs. A few weeks ago with the sell-off that we saw, a couple days the markets went down, they blamed it on inflation. Has inflation went anywhere? Has it disappeared? No, in fact, most things are more expensive even since then. The markets keep going up. And let's bring up a chart here of the Dow Jones. And let's go ahead and go to a maximum chart here. We see the dot-com bubble that ended 1999, 2000. Everybody in hindsight says, wow, that was a massive bubble. We see leading up to the financial crisis, 2007, 2008. Everybody looks back and says, wow, that was a massive bubble. And now here we are to the far right, almost a parabolic vertical pattern right here. But everyone thinks this is going to continue forever. And there's definitely people out there making money. I'm not dogging anyone for making money in these markets. Absolutely not. But I really hope you have some money out of the system and set aside, because when this comes down, this is going to be one of the most brutal market corrections ever. And it doesn't have to be much. All they have to do is stop manipulating. They could, at the stroke of a pen, change a law that says there can no longer be these stock buybacks. No one knows, as far as I know, no one knows exactly what's going to pop this bubble. But this is a massive bubble. How can you look at these charts and say this is not a massive bubble? We see company valuations way above where we saw in both of these previous bubbles. We've got zombie companies that are barely making enough profits to pay off their debt, yet they're borrowing money for nearly zero, turning around and buying back their own stock. We have a very large percentage of companies. The last time I checked, it was over 20%. A large percentage of companies, not just in the US, but globally, are only in existence because of endless amounts of debt and borrowing and low rates. But yet everybody thinks this is going to be just fine, that this is going to keep on continuing, continue forever, nonstop. And yes, people are making money that are going long on this. They're buying the dips. There's some assets that I've been buying and doing some trading. But it's never enough. It's for most people, it's never going to be enough. Most people aren't investing enough money. Let's just take the Dow Jones, for example. Let's go to a 1-year chart, and let's go to a 5-year chart. Let's say you would have bought when the health crisis first emerged. It dropped down. At one point, it was down to 18,000. So essentially, we're double where we were. We're double. Most people only have a few $1,000s to invest. So even if you doubled your money in these markets, let's say you went from 5,000 to 10,000. I'm glad for you, but is $10,000 going to get you through this economic storm, which we're seeing? All these rising prices, the cost of everything going up. You see, for most people to really get somewhere in life and maybe to get out of the paycheck to paycheck situation that most people are in, you're going to have to bet big money. We're talking hundreds of thousands of dollars, right? So if you're betting 500,000, you double your money to $1 million. now you're getting somewhere. But most people, again, just have a few thousand in their trading accounts. And what that does, that encourages people or motivates people to bet bigger, because if you don't have much money to invest, you want to try to maximize your profits. But what happens when the correction happens and these people are all in, they're 100% in the markets, they're not going to have anything on the side or out of the casino to buy when things do collapse, because a lot of people are all in and greed takes over, and people see the gains and they want to make more gains, and it's FOMO, it's fear of missing out. And you're going to see a lot of people get hurt, folks. And this is going to be one of the most devastating corrections. When it does happen, it's going to be one of the most devastating corrections that we've ever seen. Now, there are things that we look for as far as calling tops. We're going to look for this double top right here. We see the all-time high in the Dow Jones was about 36,327. Will we blow past that, or will we top out and see a big drop? So when we get around that area, we're going to pay extra close attention to this. Right now, I don't see any sign of this stopping. It doesn't mean that things can't change in 6 months or maybe even a year. Things could change, but right now it looks like bubbles being inflated bigger and bigger and bigger. The Fed's keeping rates artificially suppressed. We look at the 10-year bond on that. And looking at this 10-year bond is going to be an indicator of what is to happen. Will the Fed allow rates to rise? You're going to see this also with mortgage rates. And let's go out to a maximum chart here. We see the trajectory is lower. Yes, we see increases here. It bounces up and then it goes back down. When we see it bounce up above 2.68 or in that general area, when we see it bounce up above 3% and stay up there for a longer period of time, then you know the trend has broken. And then you need to look out below at that point, because you know the Fed is then allowing things to come apart. And that's when you know the collapse is about to begin. But for now, I don't see that. I see the Fed here, they're going to come back in and they're going to buy securities. They're going to keep rates artificially suppressed. They're going to continue to add on to their balance sheet, even though they're telling you they're going to taper. All that means is they're going to slow down their purchases, but they're not going to slow down that much. It's still going to be the Fed buying everything under the sun, bubbles getting bigger, propping up the banks. No reserves required. No reserves required for the bank, so they can keep on pumping out loans, keep people in debt, borrowing more and more money, and they have to, because prices keep going higher. You have to give out bigger and bigger loans to keep the bubble going. So we're going to keep an eye on all these indicators, all these things that we know that indicate when this ball game is going to come to an end. This massive bubble, way beyond anything that we've ever seen. So be careful out there. Invest wisely. And the central banks know what's on the wall. This is out of Bullion Star. Irish central bank raises gold reserves by 33%, worried by inflation. So yes, central banks, the money printers across the world, are buying real assets. And that's why I tell everybody, have some money out of the system, have some real assets. If you see some sort of a power outage, if your bank goes down, you can't log in for whatever reason, when you're all in the markets or when you're all in some sort of digital asset or investment, it's going to be really scary if that money's not available, or when we do finally see the correction. If you're all in, I would be very, very concerned with your position. Right? Most people don't get out before the top. Most people want to make more and more money. They pretend that this is going to go on forever, and it may go on for a while longer. There's no way to really know the objectives behind the people that are behind this. But what I'm doing is buying things that are on sale. There's some recent sales that popped up here with some assets correcting in value. I continue to buy silver and to ride this bull, bet against the inflation. People ask me all the time what I'm doing, what I'm investing in. Link down below. I get it from ST Bullion. Fast shipping, never had any problems. Ordered silver probably over 100 times now over the years. And I try not to order a huge amount at once, because, if something does get taken, or let's say misdelivered, you don't want to take that chance. So I buy every couple weeks, at least one or two times a month. I'll link down below if you're interested. That's what I'm doing. And for those that are not doing this, more power to you. But I would double think your strategy. If you're all in these markets again and something happens, it's going to be some pretty sad and some pretty hard times when we do see the turning point. And there will be a turning point, but in the meantime, you could definitely position yourself and get ready for what's coming. Hard assets, even some cash out of the system. I know it's hard to have a lot of cash because you see the value just eroding. But if you're all in again, when the correction happens, it's going to be very, very hard times, sad times for a lot of people. All right, thanks everybody for being here. Stay well, keep stacking, stay safe. Bye for now. Peace.